Wow. This will probably be one of the craziest videos that I've ever recorded. The market is in full free fall mode right now. It is crashing. We just opened the future session negative 2.61%, went all the way to negative 5% at the lows so far, which, by the way, the lows are just about where that previous all-time high was on January 4th of 2022. So it's able to find support so far during the session, but this is a crazy open, one of the craziest, if not the craziest Sunday open that I can remember outside of just COVID experiencing that one. And a lot to talk about in today's video. We had a ton of dark pool prints last week. Also over here, you can see a SPY whale was able to make 1,037% on their puts just last week alone. And here's some of those dark pool prints that I just referenced there. Billions upon billions near end of day on Friday. So a ton to talk about. This is going to be jam-packed. Get ready and let's dive in right away. So first of all, I want to go back to the chart over here because I mentioned in last week's video this pattern that we saw of previous consolidation from up here. And actually, I'll go to SPX's chart. It's a bit cleaner since I have a lot of levels on my SPY chart. But if you remember the pattern that I spoke about from before, we had this very clear range that we had been trading in for about 3 months from up here. So I can circle it for you. This is a very lengthy range. Pretty rare you see this S&P 100 remain range bound for such an extended period of time. And we were able to break below that range once it was able to breach 5,778 because that was the previous low, as you can see over here. Where this gets interesting is we had the breakdown move. It bounced up to retest the range, which is what I was looking for, if you remember in those previous videos, but we did not reclaim the range at all. Not even on a single daily close was able to close back above within the range. And because of that, we had a rejection. So that rejection went all the way down to 5,500. We bounced going into the tariff announcement. And then, as we all know by now, once the tariffs were announced by Trump, it was a complete crash afterwards. So this has been insane to say the least. We closed about negative 6% on the day at the lows on Friday, which is just crazy to think about. And then, of course, with this open so far on the futures session, you can see just about 4% right now when I'm recording this. That is absurd that we're this far down, all the way down below 5,000 again, even for SPX cashed. So we have not been to those levels since all the way back here around January of 2024. So well over a year ago since we were trading at these levels, and just absurd to think about. So as for the technicals, again, the previous all-time high, very critical level. This was just about 4,809 for ES. I believe it was 4,813 for SPX cash. That level is going to be the most important level of this entire week, because if that is unable to hold, you're going to see a lot more liquidations below there. This is known to be a critical level. We can see that just evident based on when it was retested afterwards. Remember, it was about a year and a half, 2 years before it got retested once it was able to break out in December of 2023, January 2024. And ever since, we've been able to remain above it. So this is the first critical retest of this level as a support. Beforehand, it was the resistance, like over here, and it was resistance over here at that end of 2023, early 2024, and now it is acting as a support. So this level needs to hold. Of course, can wick under. We can see price wick under going into Monday or Tuesday, but we need it to pick back up by the daily. Otherwise, this is going to be extreme, and it already is extreme, but this can get a lot worse if it is able to fall below that. So this area over here needs to hold for bulls to have some type of a bounce off of it. So that's the level that I'm watching closest. Now, the second closest level that I'll be watching is based on what we can see over here on the S&P 500. Look at all of these dark pool prints. All these came in deep after hours on Friday, which is pretty rare to see, especially for the amount of premium on them. You can see here 505.58 and 505.28 were the levels for all of these. So if we go to the SPY chart, which I know there's a lot of levels on here, but just bear with me, no pun intended. But you can see over here, if I go to the 15-minute and I can draw this level, this will have to reclaim at some point. I know we're well below it at the moment, but about 505.58 is going to have to reclaim at some point. And I can zoom in just to optimize this level a bit more. But this is going to have to reclaim at some point for bulls to have any chance at upside possibility, because when you have such a substantial level and it sells off from that, that shows a ton of distribution at this level. They're actually selling into this level based on Friday's close because they expected to get a lot worse over the weekend. And so far they have been right, because we are well below where that level is right now. So again, I know this is far away from where we are right now, but especially with the type of volatility we're seeing. If we were to have a pickup candle sometime this week, it's able to get a lot higher, or just in the future, whenever it decides to get back up here, this level is going to be a very strong resistance initially. And it also is something that bulls need to reclaim if they want to see this go much higher. It also would coincide with a nice gap fill, assuming that tomorrow we open with this pretty substantial gap down. So that's for the technicals that I was looking at. Also going back over here to OrderFlow, of course, want to mention this trade that we saw here, 1,037% for this whale. If we click on the power alert over here, and we can see that they actually put in 3.5 million in premium for this order for the 409 expiration, and they made $36 million off of that. Is one of the craziest trades that I've ever seen get alerted on power alerts here. So always a good thing to reference this. And also, it's not the end all be all. You can see there's other ones that go worthless eventually. It's also possible that this order was profitable at some point and they closed it out. So you have to keep that in mind. But some of these aren't going to hit. Some of them are going to hit. You can see 235% here, 416% there. It's a good way to scan for potential setups that fit your criteria. I just want to make that clear. It's never a good idea to blindly follow anything, especially with how volatile the stock market has been. But this is just a good reference point to find something that fits your criteria. And if it does align with that, then it's something you can possibly follow through with. So I regard this very impressive. Wanted to highlight this because it's very rare to see 1,000% gain, but some pretty incredible gains all around, like some of these over here and the PLTR, IWM up here for 155%. So wanted to mention that. As for the flow for the S&P 500, if we go to last week, as you can probably imagine, it was majority put flow that we saw. And I'll filter for over 2 million because, as you know, I typically like to do 1 million, but there was so much premium last week that I'm going to do over 2 million. And you can see here, put flow is 99.7% to 0.3% call flow. Now, obviously, some of that has to do with put selling. So if they were selling their orders for profit as we continue down, that is going to show up over here. However, still majority puts across the board. And some of these were pretty far out the money at the time that they bought them. If you follow the Twitter account, you probably noticed there's been a ton of far out the money put buys, especially for short dated expirations that we've been seeing over the course of the past couple weeks. So it was no different last week at all. You could see 500 strike over here that they bought at the 520 spot price. And as we go down, there was some put selling over here that was notable, some closing orders, as well as some people trying to capitalize on the heightened volatility. And this is a risky bet because of how far we dropped during the future session, like I mentioned earlier in this video, because yes, volatility was very high. Yes, we saw over here, to show you really quick, we saw that the VIX closed up at 45.3. By the way, we haven't closed this high in the VIX since the COVID crash. Like, yeah, we had over here during August that volatility event, but we didn't close up here at 45.3. The last time that happened was, I believe, April of 2020. So yeah, back here, about April of 2020 during the COVID crash. And of course, we know what happened just a little bit before then. So really incredible close in terms of strength. Pretty rare to see this amount of strength in the VIX going into the end of the day, let alone the end of the week. So that was kind of a precursor to what would happen here going over to Sunday's future session into Monday. But incredible close so far. And going back over to here, they wanted to capitalize on that heightened volatility. Again, very risky in case you have that vol event, that 2 or 3 standard deviation black swan type event, kind of like what we're experiencing right now. They're predicting that doesn't happen. They're selling the volatility on that. And they want to profit on the volatility dropping or potential bounce in the market. And so far, they are going to be in a lot of pain come Monday. So not all of these guys were able to predict it correctly, but with volatility, you typically see a lot more traders enter the market because there's a lot of opportunity with that. So this is kind of what we saw with this put selling frenzy that happened. As you can see earlier on in the week over here, was a lot of put activity still. So just majority puts across the board, like I mentioned, and it's going to be critical to see, is that consistent with this week? You can even see over here when its spot price was 560, they were even buying this 500 strike for end of month, 530 strike when it's at 556. So really an incredible amount of put buying all of last week. I'm going to see if that's consistent throughout the rest of this upcoming week, because so far they've been nailing it really well with all of these far dated orders, and even some of the ones that came in. This was pretty close to end of the day on Friday, 490 strike, 485 strike. We're going to want to see if they continue continue to buy these far out the money strikes with relatively short-term expiration, all things considered. This expires in about 5 or 6 weeks from now. So regardless, going back to the chart over here, I know I'm bouncing around a lot, but this is some crazy times right now. For the last thing that I mentioned, I want to bring your attention to some of the Mag 7 because these are going to influence the market the most, obviously because they're the highest weighted. And I want you to look at Apple over here. I'll get rid of some of these older trend lines since they're a lot higher up now. But really what we're seeing is a complete collapse back into a previous range. Typically, whenever you see a breakout like that Apple saw over here, we broke out back around May of 2024, we had that very nice upside move. We even had a retest of this now demand zone, previous supply zone when it was in the range over here. This is the range that I'm referencing, similar to what I showed you guys on the S&P 500 earlier on in this video. We had the breakout of that, we had the retest, and then in addition to that breakout, a lot higher. Well, what's interesting is we're retesting it again, but we actually flew straight through it like butter. It gapped down and it fell through. And it looks like, again, based on the future session so far, that it's going to open red tomorrow. And of course, Apple would fall a lot more if that were to be the case. It needed to hold this level over here. Otherwise, there's substantial flush risk back within the range. And the target of it, as crazy as it might sound, I'll go over and draw it for you guys, but the target of it would be all the way down to where the lower end of the range was previously, around 166. So I know crazy how far it is, but if bulls are not able to reclaim this early tomorrow, which of course you need the market to bid in order for them to do that, then the target of this would be much lower, to the lower end around 166, because it would have to adhere to the previous range that it traded within. So that's one thing that I'm looking at going into this week. Also, some of these other tickers, for example, Amazon would be another one, because this broke below a previous range as well. It's never a good sign to see it break below previous ranges. Here's the range over here, kind of similar time period to when Apple traded in its rebound price action. We broke out of that range and now we are retesting it. The top of the range is about 189.86. We broke below that level, clean breakthrough after the tariff announcement, and now it is down, going towards the lower end of the range, similar to what Apple is doing right now. Lower end of the range is around 150, 151. So of course, if S&P 500 futures remain red going into tomorrow, this would be the next support spot for it. And this is full-blown crash mode, guys. This is some crazy stuff that we're seeing right now. In order to reclaim the previous uptrend that it has to get back above 189.86, because that was the previous high of this range. There's a little fake out over here, but for all intents and purposes, this was the previous high over here, and then as you can see over here before we finally gapped up and broke out of it. So needs to reclaim that level. Otherwise, as long as it's under, there's flush risk. There is that bearish potential. And the last one I want to mention over here is NVIDIA. Of course, this has carried the market a lot over the course of the past 2 or so years. We had a breakdown over here, kind of similar to the S&P 500 of a breakdown of a level, but this was an uptrend that it broke through. So you could see clean break over here of the uptrend, came up to retest it, immediate rejection, came up to retest a second time, and then an immediate rejection off of that. And it's been going down ever since. So this is also in a clean breakdown. Key level to watch for this week. And we'll have to scroll further out for this. But you can see over here, we have 2 critical levels. One that it's nearing on, but you'd assume it would gap down below this, assuming that the S&P 500 is down as much as it is right now. The next one would be all the way down here around 75. So these are the 2 highest probability pivot points for a bounce. So you want to see either 90 hold, or it's going all the way down to 75 and you want to see that hold. Otherwise, I don't even know what'll happen at that point. Like, that's below every critical support level that is known around this range. So these are the 2 levels that I'm watching for NVIDIA this week. And along with all of these Mag 7 tickers that I referenced, all 3 of them, this is going to influence the S&P 500, like I said earlier. So this is why, even if you're not interested in trading NVIDIA, Apple, Amazon, etc., you're going to want to see how price reacts to these levels going into the week, because that will have an influence on the market as well. So I'll be watching all of these as well as the rest of the Mag 7. Also crazy, Bitcoin is falling right now pretty hard across the market. We're seeing a ton of weakness. So it's going to be a very interesting session tomorrow as well as the rest of the week. Might even have to do a Wednesday video to update you guys on how those levels do, as well as OrderFlow. If you want to see that, let us know in the comments below. Otherwise, I'll see you guys next time.